Welcome to our podcast series, Talking with Traders, hosted by expert trader Garth McKenzie in London, from where he's interviewing various guests on the topic of trading.
Welcome back to Talking with Traders. This is the fifth season of the podcast to take us up to the end of 2022. Thanks to all our loyal listeners for returning, and welcome to all our new listeners. As before, IG Markets have come on board as sponsors of this podcast. We're truly grateful to have such an award-winning CFD provider as sponsor alongside us. In this season, I'll welcome back some guests from the previous seasons of the podcast to get their updated market views, and we'll also be bringing in some new guests to the microphone too. As always, the aim with these podcasts is to give you the opportunity to listen to differing market views and to assist you with your own trading and investing education. So with that in mind, let's get straight into another episode of Talking with Traders. Welcome to another episode of Talking with Traders. This is the third episode of season 5 of the podcast series. And it's a great pleasure today to welcome a young day trader from Ballito. His name is James Bruce. It's nice to bring different guests in, sometimes guests that are not necessarily well known to the audience, but someone who a lot of our guests would probably relate to. James is, as I said, 24 years old, youngster, trades for a living, has been doing this for 2 years. But without me giving too much of your background away, James, welcome to the podcast. Thanks for joining me today. Thanks
so much, Garth. Really honored to be here.
Yeah, super. Can you give us a little bit about your background, James, just before we start talking about the trading? What's your background and how did you actually end up becoming a trader?
Sure. So I was born and bred in the Eastern Cape in South Africa. I went to Selborne College in East London, a big rugby school. And my dad's a chartered accountant with his own firm. So I've always been into the financial markets and, business side of things. But eventually, after leaving school, I moved to Durban, South Africa, under a 3-year contract with the Sharks rugby union here in Durban. And after 2 years into my contract, I messed my knee up. I tore my ACL and meniscus in my left knee. And obviously that left me thinking, well, what's my future with rugby going to be like? So during that time, I got introduced to trading by one of my mates that was also playing rugby. And it kind of took off from there.
It's amazing. So you 2 years into your contract, into a 3-year contract, suddenly it comes to an end. I mean, that's a terrible thing to hear that your knee. Is that it? Is your rugby career over, or do you think you could go play again at some point?
Yeah. So I ended up. So I had my first senior game for the Sharks, literally a month before messing my knee up, and then I during the time when I found trading and I was sitting at home doing my BCom. So I was also studying my BCom financial management at the same time as doing my running through my contract, right? So I was into the financial markets at the time. Like, always in finance, we're learning about that stuff, stocks, calls, puts in our financial management degree. So what happened was I ended up coming back after rugby. This was 2019 now, maybe May 2019. And I then ended up playing another senior game for the Sharks, actually down in Port Elizabeth. And that game was actually televised on TV. So I did actually end up coming back and playing rugby. After that 2019 season, I just didn't get another contract. So I was left a bit stumped as to what my future holds, and that's when I started to take my trading a little bit more seriously.
Okay, fascinating. So tell us, what is it that you trade and what sort of time frames? Get a bit of a background into the type of trading that you do.
Sure. So I got into trading mostly the forex market. So that was in 2018, middle of 2018, I got into trading. And then essentially after getting into the forex market, recently I've also added some US indices into my trading watch list. So I'm trading about 6 forex pairs, so namely the pound and the euro pairs, and then the 2 main US indices, which is the Nasdaq and the Dow Jones.
Okay, all right. So it's 6 forex pairs, 2 indices. And I guess the nice thing about that stuff is all of it trades 24 hours a day, or certainly the US futures do. Obviously, forex pairs do as well. So you don't stand any risk really of big overnight gaps or anything like that. But even so, whether I'm talking overnight gaps, it's my understanding that you're more of a day trader. Is that right?
Correct. Yep. So I'm trading based off the 15-minute time frame. That's the time frame that I use to gather my data and bias for the day. So I'm really holding trades overnight into the day, into the next day. I'm trading, probably my average holding time would be about an hour and a half. So really day trading, and just focus on the 15-minute time frame, and then I am taking my entries on the 1 minute. So I use my 15-minute for my bias dictator for the day, and then I'm taking entries based on the 1 minute time frame.
Okay. All right. Fascinating. And I mean, do you have a particular playbook that you stick to as trading? Regular listeners to this podcast will know that I'm quite a big fan of the playbook. Sure. And Stephen Goldstein, who's been a guest on this podcast twice, and I've done his mentorship program and his high performance trading program, talks a lot about a playbook. And effectively what that means is you need to have sort of written down what it is you trade, how you trade, what type of setups need to present themselves. So do you have such a thing? Do you have a playbook that governs how you trade?
Correct. Yep. So during the time that I first got into trading, I was more swing trading, right? And then essentially I found Austin Silver, who's been my mentor, and I ended up taking his course. So I took multiple courses, just didn't find anything that worked for me. And then I ended up taking his mentorship he's got detailed entry and exit rules. So we call our entries the A1 formation, which is essentially a candle formation off EMAs on the 15-minute time frame. And then we also got the D1 formation and the D2 formation. So they're all playbook trades that have been back tested and proven profitable. And those are the entries that I'm taking. I'm more focused on the D1 entry and exit system that uses the 50-minute and the 1 minute in conjunction with each other.
Okay. Are you allowed to give us a little bit more insight into what that looks like? Talk
Sure.
about a D1 setup. What has to happen for a D1 trading setup to be apparent?
Sure. So on the 15-minute time frame, good D1 entries come off key levels on the 15-minute time frame. So I'm using a TDI indicator, which has a trend line, a market sentiment line, and the RSI built into it. Mm-hmm. And then I'm using exponential moving averages, namely the 8 EMA, the 21 EMA, the 50 EMA, the 200 and the 800. So I'm using those 5 exponential moving averages, and essentially great D1s come off the 21 EMA, the 50 EMA, and the 200 EMA on the 50-minute chart. And that's where I'm looking, going down on the 1 minute and looking for my entries on the 1 minute when price reaches those 50-minute EMAs.
Okay, fascinating. So if let's say, for example, it gets to a 21 EMA on the 15-minute chart, what are you then looking for? Are you then looking for a candlestick reversal to enter a trade, or what?
So I'm looking for 1 minute, actually 1 minute divergence that could signal a reversal at that level using the RSI that's built into the TDI and obviously price action. So I'm using 1 minute divergence at those key levels to signal, okay, the market could possibly be changing to move back into trend after the pullback.
Okay. All right. Interesting. And I mean, obviously, when you're trading off a 1 minute time frame and you're holding for an hour to an hour and a half, perhaps as the average, as you said, you're not looking for big moves. You're clearly trading relatively small moves. I mean, on a currency setup, what do you consider a good move in an hour and a half on your trading?
Sure. So I'm normally, so just with something that I've been working on lately in my trading, I'm actually going for 1 hour. So with a high win rate, and I did send you through my stats from this year. I do have a high win rate. So with that high win rate, coupled with going for 1 hour, just makes sense for me because I'm winning a lot and I'm getting my 1 hour. I'm hitting that 1 hour target a lot. So in the hour and a half that I'm on my average holding time, holding these trades, I'd consider about a 25 to 30 pip move quite sufficient for me.
Okay, so 25 to 30 pips. All right. And 1 R. So for those listening to the podcast who maybe don't know what that means, 1 R means 1 unit of risk. So, correct. We always talk about R in trading. And a lot of the time people will say, you want to try and get a risk to reward ratio where, you're getting 2 or 3 or 4 times R. So 4R as opposed to losing 1 R. And the thinking is that, even if you have a system that loses more than 50% of the time, if your win rate is better than your loss rate, then you can still make money. So what you're saying is you go for 1 R. So the chances are you could lose 1 R, you could make 1 R. In other words, your losses are equal in size to your profits, typically speaking.
Correct.
But you're saying that your hit rate is sufficiently high. You win on a lot more of your trades than what you lose on. And that's what makes you consistently profitable.
Correct. Yep. So just looking at the stats, my win rate this year has been at 82%. So with a high win rate, it just makes sense for me to go for that 1R because I'm consistently hitting that 1R on a consistent basis with a high win rate. So if you have a high win rate, you don't need a 4-5R move. And generally, when you go for those 4-5R moves, you're going to have a lower win rate, which kind of messed with my psychology a bit. Because the more you try and hold, the longer the more chances of your win rate dropping.
Yes. Yeah, it's interesting. I mean, I've certainly found that in my own trading, and you try and run a winner and then next thing your winner's evaporated in front of your eyes. And sometimes you sort of think maybe it wouldn't be a terrible thing to actually lock in some of those profits, even when they are small. Now, the next interesting question I want to ask you then is again regarding risk. We're talking about 1R, but for every trader that is different. The old rule that so many books things suggest is that, you should never risk more than 2% of your capital. I found that to be too high in my own experience as I've gotten older. But for you, what does R represent? What is 1R? I mean, in terms of a percentage of your capital?
Sure. So I definitely agree with you. And when I first got into trading, I thought 2% of the capital is nothing. But once you start getting your hands on more capital, you start to realize the power of compounding. And so normally I'm risking no more higher than 0.8% of my capital on any one trade. But my sweet spot's around 0.5, so 0.5%.
Okay. All right. So 0.5. Yeah. That's also, funnily enough, the number I've come down to, where I've also found I'm feeling relatively comfortable at that. And like you said, it also depends on the capital that you've got at your disposal. I mean, if you're only trading with 10,000 Rand, first of all, you probably shouldn't be trading, but B, 0.5% of that is like, it's nothing, right? It's not even going to move the needle, and your transaction costs and crossing the spread is going to hurt you. So it obviously makes a big difference when you've got a more chunky capital base that you can work with. To that extent, I mean, being properly funded is absolutely vital in this game. You're only 24 years old. So, I mean, am I allowed to ask what sort of capital you're trading with?
Yep, sure. So I'm trading with currently plus minus about $600 US.
600 US, 600,000.
600,000 US dollars. Yep, correct. Yeah. Yep. So that's spread out via prop firms, via personal capital and private investor capital.
Okay, interesting. So you mentioned prop firms in there as well, and obviously personal capital, we know what that is. I know from chatting to you beforehand, you mentioned that you've got some family money in there as well that you're trading with. I want to quickly differentiate the two. I mean, first up, let's talk about the family money for a moment, and then we'll talk about the prop fund money in a second after that. Family money is an interesting one, because I've certainly found in my own trading experience that when you start trading other people's money, and particularly if it's family money and it's very close to you, that's not a faceless entity. It's these are people that are important to you. Does that not add a lot of pressure to you to feel like you have to perform?
So I was actually very grateful. So my girlfriend of 5 years. So when I first started to start, making a thing of this trading, this was around 2020. My girlfriend's dad actually came to me and said, listen, I want to give you a chance. He has X amount of dollars. He gave me $10,000 to start off with. And he's like, if you stuff it up and you lose it, don't worry. I want to give you a chance. But that ended up going well. So he ended up giving me more. And then so my dad came on the bandwagon as well. And I was like, well, I heard you doing well now as well. Because my dad was also skeptical about the trading as well. But once he realized, the numbers don't lie, and I started to produce, they really gave me the freedom. So there was no added pressure. They were really, really good to me.
Okay. All right. That's super. It's great. Good to hear that you're on top of that and that it's not putting any extra pressure on you. Because I know certainly from a lot of guests I speak to and a lot of other traders, I know that, the moment you start trading with family money or whatever, it can become quite emotionally taxing, quite psychologically challenging. And then the prop money. Now that interests me, because you mentioned that you trade prop money as well. So that means you've been funded by, external sources, prop funds.
Yep. Okay. Yep. So lately there's been quite a big thing especially in the forex industry. I know they do obviously can also trade the futures of the indices with them too, and crypto. But there's been these remote prop firms such as FTMO, the Funded Trader, and they're all remote prop firms that you can manage the money from home. So if you pass a two-step verification process, you're able to acquire that capital and make a profit, a percentage-based profit on the money that you make from them.
Okay, that's very cool because I mean, this is really interesting, in fact, because a lot of young traders, aspirant traders, possibly are good, have a lot of potential, but they're not properly capitalized. So this is really interesting. You've been able to gain capital, be allocated some capital from a prop firm. Just tell us a little bit about the selection process. You said there's a 2-step process that you've got to go through. What does that look like if for someone else potentially that was interested in wanting to trade prop firm money, be funded by an external source? What do you need to go through to get allocated some capital from one of these firms?
Sure. So, luckily enough, I do have my BCom degree. So I know lots of other prop firms, like in-house prop firms, need you to have a degree to do so, right? But with these remote prop firms, you don't actually need that. So anyone can apply for them. You pay a fee to do the challenge, to cover the costs. Obviously, they got to run their business in the background. And essentially each prop firm has their own requirements, but I'd say the industry standard would be a 10% gain in a 30 to 40 day period. And then once you pass that, then you got to make 5% in a 60-day period. And then you acquire the capital the account size that you paid for.
Okay. All right. And what sort of, because is this their capital then that they're effectively giving you it's like an apprenticeship or giving you a test, but it's their capital to check whether you're up to the job?
Correct. Yeah. Well, you're actually trading on a demo account first, and then you're trading live funds. So it's not you don't go trade live straight away. It's a demo account first, and then once you've passed the 2-step evaluation, then you acquire the live capital, and then you make real profits from that. Okay.
So all right. So 10% in 30 to 40 days is what you need to make first up, and then another 5% beyond that after 60 days. So 15% total return, I guess. But all of that is on a demo account. It's in a demo environment. There's not real money on the line. Okay. And then the amount of money that they then allocate to you, I mean, is that a discussion that you have with them, or do they have a sort of a standard tiered structure as to how much they'll give you based on your performance or your experience?
Sure. So you decide what account size you would like to go for. So they offer from $10,000 up until $200,000 US.
Right.
And you obviously, depending on the test for each one will vary, because the more capital you want, the higher the fee that you'll have to pay to take the test. And then once you get funded and you are trading the live capital, you pass the 2-step evaluation. They do have scaling plans as well, depending on your performance going forward. So it doesn't stop once you get the live capital. If you do perform on it, you do get a scaling plan that allows you to scale up that capital. So let's say you started with $200,000, you passed the 2-step evaluation, and now you got the live capital that you can make 80% of the profits from. If you do 10% in a 4-month period, you get your account scaled up by 25% and so forth every 4 months. So it really is based on a performance fee basically afterwards, once you pass the 2-step evaluation.
Yeah. Okay. So what you're saying, they give you the money to trade with, and then they give you 80% of your profits. They keep 20%.
Correct.
Sounds like a really good deal.
Yeah.
What about risk? I mean, how do they manage your risk? Obviously, you've told me, you sound like you're on top of the risk management and you're doing it properly. But I mean, what's stopping you, for example, becoming a rogue trader and saying, well, I've got all this money from a prop firm. It's not my money anyway. Sure. I'm going to swing for the fences. If it works, hey, I'm going to get 80% of the profits. And if I blow the account up, well, it was never my money to start with. How do they manage that risk? How do they manage you?
Sure. So they do have drawdown limits. So you got a 10% drawdown buffer, which I feel is quite a substantial, especially if once I'm on the live accounts, I'm not trading at even 0.5%. I'll drop that to 0.15, 0.2, because essentially trading is a long-term game. So they do have daily drawdown limits as well as max drawdown limits. So if you hit that daily drawdown limit, you lose the account, and the max you can lose is 10%. So that would be their risk management in the back end.
Okay. And I mean, if you hit that daily drawdown limit and is that it? You're out?
Yeah, that's it. You're out. Cheers.
It's not like, don't come back tomorrow, try again. You're gone.
No, you're gone. Yep.
Okay. All right. So it's quite stringent. Okay. But it's obviously understandable. I mean, this is other people's money, and it's understandable that they would want to manage the risks very carefully.
Yep.
All right. Now let's move away from the soft, the hard stuff rather, and let's talk a little bit about some of the softer stuff.
Sure.
Because trading is not only about the hard stuff, the sitting in front of the screen trying to make the returns. There's also a whole lot of background work that happens in trading. to become a successful trader. So to this extent, there's daily routines, journaling, prep sessions, post-market analysis, all of that. But I want to go through that a little bit with you and just try and get a picture for what an average day looks like for you. Can you take us through your daily routine? I mean, let's start in the morning and then walk me through the day as it progresses. You're listening to Talking with Traders, a podcast series brought to you by IG, a world-leading online trading and investment provider. If you haven't checked out the IG online trading platform, please do so and visit IG.com. Also, make sure you subscribe to the podcast series on your favorite podcast app or website by clicking on the subscribe button, and you'll be notified weekly as we release new episodes.
Sure. So I'm lucky enough to be in South Africa. So the time zones for my trading are really, really nice. So London opens currently at 9 a.m. South African time, and the New York Stock Exchange opens at 3:30 in the afternoon. So normally I wake up at around 7 o'clock. I make myself breakfast. I go for a run, and I look on my charts when I get back from my run. What's maybe lining up for the day? What pairs on my watch list are looking to have the most potential for that day? I then get on the Discord in the live chat with all the other guys, and say good morning, say what's up, and see what they're watching. And then I have my morning session. So my morning session is normally from about 9 a.m. just before the London Open till about 12:01 South African time. And then I take a little bit of a break. I'll go chill. I'll, just relax, maybe watch some Netflix, listen to a podcast, and just chill out, go get lunch. And then I'll come back for the New York Stock Exchange Open just before 3:30, just before the Open. And then I'll trade the US session, and then I'm normally off to CrossFit in the late afternoon. And then after CrossFit, so I feel that that's very, very good for mental health, because sitting in front of the desk as a trader all day can be quite taxing. So I go hit that, and then in the evening spend time with my girlfriend and her family, catch up with my parents via the phone, and then I will do my daily report card in the evening. So the daily report card is basically, what trades did I take that day? How could I be better? How could I have made more money? How could I have lost less money? And maybe what trades did I miss that day? And I all mark them up, save them as a file on Google's Sheets, and yep, that's basically me done for the day.
Okay, fascinating. So what you talked about there at the end is you talked about your daily report card. I mean, that's obviously journaling in another way. What type of stuff do you include in that journal?
Sure. So I'll have a space for what pairs that I'm watching today, the watch list, what's on my watch list, my pre-trading routine. I've got to make sure I do that. Then I'll have space to log any trades that I take. I'll also have a place which is called our idea generation section, where we will playbook any trades that maybe we weren't in, but maybe there are possible trades that we could have taken, but we want to save the markups. And then I'll also have questions such as, how did my day go for the day? What was my P&L in percentage for the day? What could I have done better? What could I have done better to make more money? What could I have done to lose less money if I had a losing day? And those are just the things that we have on there, as well as also I got to certain things that I have to do on the chart, so such as mark up 3 charts for that day. I've got to, and then off the chart stuff such as go to gyms, listen to 20 minutes of a podcast a day. So that's all logged in my daily report card and my journal.
Okay, it sounds really good. It sounds like you're very, very disciplined with this. And what's interesting is just to tie this back to your rugby background, because I mean, being a rugby and effectively a professional rugby player, I mean, you were a professional rugby player, you were contracted to the Sharks. The importance of the background work that goes on. It's not just a game that you play on the field, it's also everything you do off the field, and in fact possibly more about the stuff you do off the field that enables you to perform on the field. So all of this that you're talking to me about, your pre-trade routine, your post-trade analysis, your doing exercise, etc. I mean, all of this stuff, I can see there's parallels here between you being a performance sportsman as a rugby and trading as a performance activity as well. Yeah. And I guess you're treating it in a similar way from everything that you're saying to me.
Correct. Yeah. There's so many parallels between sports and professional sports and professional day trading for a living. I've always was told that one of the sayings that Mark Bellafiore from S&P Capital has is, if you don't know what the score is, how do you, if you don't know what the score is, how do you know where to improve? So if you're not tracking everything, how are you going to do? How do you expect to improve? And it's the same like with rugby. We would go in and have a team discussion of analysis and see what we're doing for that specific what we did wrong for that specific day, and then and see how we can improve. And it's the same thing. So team, how can a team improve better? But then also personally, how can you improve better? How could you improve individually better for the next game? And that's the same as day trading.
Yeah, really interesting. And the fitness part of it is key. I mean, you've talked about fitness. So many other things I read lately. A lot of interesting trading books have come out in the last 2 years about more of the external stuff around trading. And it's things like nutrition and exercise and getting the right amount of sleep. I mean, do you journal that type of stuff as well? Do you journal how many hours of sleep you got the night before, as an example?
Yep. So actually, one of my things in the off the charts journaling has after being in bed by 11 p.m. the previous night. If I was not, then I don't. Then I can't check it off. So maybe that's an area that I need to improve on. Right. But I do check my sleep via my Apple Watch and my HRV scores and that as well. I know Steve Goldstein loves talking about the HRV readings as well. And so definitely.
And interesting. And nutrition as well. And how well hydrated you are. Because all of this stuff, I mean, some listening to this podcast might say, oh, come on, Garth, like do me a favor. This is not a podcast about, eating and foods and stuff. But these things are important, right? I mean, the way your nourishment, your level of hydration, all of these things ultimately have a bearing on how you can perform in any high performance activity, whether that be a sport or something more intellectual like trading.
Oh, for sure. So actually also another one of my things on my off the charts journaling is I can't have alcohol the night before. So it's got everything to do with it. Alcohol, bad eating bad foods, it all affects your decision making and the way that your brain can logically make clear decisions.
Yeah. Okay. Gee whiz, it sounds like you've really got this you're very much on top of this. You're a young guy, you don't have kids. So I'm sitting here envious thinking, look, I mean, I love my kids. I've got 2 little boys, but sure. Your life is different when you're young and you're able to focus to that extent, like what you're doing. You focus on your trading and focus on everything around it, without having, too many distractions in your life that pull you away. So all I can say is while you're young, keep at it, because one day when that girlfriend comes wanting kids, it's, these kind of routines and things that you're talking about become very difficult once you get older and you have more responsibilities.
No, I agree. That's why I've told her, let's, wait until we get engaged. Let's hold it off for a little bit. And then, once we set and everything like that, then we can get married, have kids and that. Because especially speaking to guys like you that have experience for multiple years in this business, I've heard it does get quite tricky.
No, tell me, it really does. You're only 24. You've got a long time to to enjoy life as a trader and giving it your all, really. You mentioned previously, and before we were recording as well, that your girlfriend has an honors degree in psychology. That's also very interesting. And that must be something really helpful, because I know, from dealing with a lot of traders over the years and courses that I've run and dealing with various retail traders, you actually need a supportive partner in this. It's no good having a partner that is obstructive or makes your life difficult because they want to be doing something else when you wanting to do your evening journaling or whatever. You really have to have a partner that is by your side and buys into this thing completely. So I would imagine having a girlfriend with an honors degree in psychology must also help to quite a large extent. She understands the psychological aspect of it.
Oh, big time. Yeah. So obviously having her honors in psychology, she's been great with me throughout my journey, through the ups and the downs. She understands what it takes emotionally to be a trader, and she always sets me on the right path. Like, let's say I come back after maybe a losing day or a frustrating day that maybe I should have been up but I ended down. She always puts me in the right perspective, and is able to set my, kind of put me on the right path again.
Yeah, fantastic. And you talked about, good days or bad days, losing days. Let's talk a little bit about that, because, we all know trading is not always a bed of roses. It can sometimes be a very frustrating pursuit. we've all had best days. We've all had worst days. Let's talk a little bit about yours. I mean, tell us about some of your best days and worst days since you've been trading.
Sure. So, yeah, I've had obviously some great days and also some bad days. As you say, it's not always sunshine and rainbows. I actually remember clearly back in 2020, I had one of my best days ever. So I made just over $20,000 US dollars in one trading day, and I thought that I was on top of the world. Until the next day came, and I ended up losing all the profits and some. So it can be very mentally taxing, just trying to overtrade, revenge trade. But yeah, I think that's why trading is such a great humbler. You can never think that you've got it figured out. You always got to be in routine, maybe doing your daily report cards. And that all helps with the psychology. But yeah, trading, you can go through times of drawdown where you doubt yourself and your abilities. But I think the big thing is just keeping the bigger picture in mind. And if you've done it before, you can do it again.
Yeah, no, well, absolutely. I know. And you mentioned that your hit rate is 82%, you said, which is very, very high. I mean, I often think that anyone that gets a hit rate of around 60% in this business is doing incredibly well. So for you to have a hit rate of 82% is phenomenal. So I mean, I'm guessing then that means by and large you come out of most days having made money and feel like a winner, I guess.
Yep.
You don't have too many losing days then.
Yeah, I'd say in a month about maybe 90% of my days are winning days. And what I've learned, as my journey continues, is to keep those losing days to a minimal, because I know there's going to be losing days in a month. You can't win every single day. But yeah, that's the thing for me is what I've learned over my 2 years trading full time now, is that I'm going to have winning days 90% of the month. It's just keeping those losing days to a minimum and realizing that, okay, cool, maybe the markets are moving in my direction on this day, or it's not playing out how I'm seeing it. I'm reading the charts wrong. I always ask myself 3 questions, and Anthony Credelli, who I've had on Orsona's podcast, he always says, is it me? Is it my strategy? Or is it the markets? And those are the 3 things. So that I ask myself if I have a losing day. Yeah.
Okay. And I mean, do you have a rule that, maybe if you've gone into a day and you get 3 losses in a row or something like that, you just pack it up for the day, or do you not have such a rule?
Yep. So I do have a rule. If I have 2 losses in a row, then I'll pack it up and just journal the next couple of trades if any other trades do present. But normally 2 losses in a day, I'll call it quits.
Two consecutive losses in a day.
Correct. Yep.
And I mean, on an average day, how many trades do you enter and exit?
I would say I average about 1 a day. So
one trade a day.
One trade a day. One. Sometimes if the market's hot, could get like 3. If it's not hot at all, then obviously could get none. But normally on an average day, I am averaging around maybe just over 1 trade a day on average.
Okay, all right. So it's actually not as active as what I thought, because I thought when you're saying you're trading off a 15-minute chart with a 1 minute overlaid, then I thought you might be doing 20, 30 trades a day, but that's not the case. So it's 1 trade on average per day, sometimes more. But actually, so it's really not over trading. I mean, this sounds like you're being pretty patient, waiting for the right setups to present themselves, then acting on it. So you're a little bit like a sniper in that respect, not just trading for anything for the sake of it. You actually wait very carefully for that 1 trade a day.
Correct. Yep. And I also have something on the inverse. But you asked if I have, for my losing days, if I have 2 losses in a row, I'll call it quits. If I have a 1 winning trade, like a good winning trade that goes my 1 hour target, I'll be like, cool, I'll take that for the day.
Oh, really? Okay, that's interesting. So you wouldn't then take the 1 hour and say, okay, cool, I'm up. Let me see if I can now, make some more, try and make it, maximize it, make it a 2 hour day. No?
So depending on the trading conditions and how I'm feeling with my decision making, maybe I can be aggressive in times like that, and maybe I'll hit another 2 trades after, and I could end up 2 hour on a day. But depending on the market conditions and what's playing out in the markets, is any fundamentals that are involved, I will just take that 1 win for the day and then move on. I found that keeps me pretty mentally in check, because we get into trading for the freedom, right? So I've found now after trading for 2 years, you don't want to be sitting at the desk the whole time. I'll go and play 9 holes of golf if I've had a winning day, and then come back on the charts and mark up some charts later and do my daily report card, or I'll go to CrossFit. So the less, if you can make your money in the less amount of time, that's what we're here for.
Yeah, absolutely. All right, super, James. I mean, just to wrap it up, you've been trading now for 2 years, doing it for a living. You've got external funding, which is obviously a huge help, and that helps you to then generate an income from this. And you're not totally self-funded, which means you're also not, I guess it helps to diversify for yourself in that you're not using all your own capital. You're making money off other people's money. Yep. 2 years doing it successfully. It's early days, right? You're only 24 years old. It's very early on in your career, but so far so good. You've made a success of it, and it sounds like you're very much on top of what it takes to be a trader. But what does the rest of your career look like, do you think? I mean, have you got some like a map of where you'd like to see yourself in 5 years from now?
So and that's great. I really appreciate those words. But I always know trading is a long-term, career and game. I want to be doing this when I'm 50, 60 years old. So, next 5 years, I have kind of a map of where I want to be of what I want to have, assets under management. So hopefully in the next 5 years, I could increase that to around 5 million assets under management. That would be my long-term goal. But also in the next 5 years, I am looking to maybe look at getting into other like in-house prop firms. I haven't there's none really in South Africa at the moment, but even looking at other in-house prop firms and looking what they can offer as well, and maybe being in a little bit of a more professional environment around more people, around traders that you can actually speak to in person and do that sort of thing. But for now, I'm really happy where I am at the moment. But we've got to just take each day as it comes.
Yeah, absolutely. Yeah, it's interesting you said that about the prop firms. I mean, I certainly know some equity prop firms in South Africa, but that's not what you do. You're a forex trader predominantly, so it wouldn't work for you. I mean, you mentioned Mike Bellafiore in the podcast. I think they've got a prop firm, but it's all overseas. You're right. I mean, it's all mostly in the US or in London. So maybe you'd need to escape the sunshine of Belito at some stage.
I'm not too sure about that.
Yeah. Okay. Well, it sounds exciting. I mean, I'm really keen to watch your career progress, James. It's been excellent speaking to you. I really appreciate your time, and you've been very generous with how much you've shared with me, because a lot of people won't. They won't give too much detail away about what they do and how much capital they trade and how much money they make, etc. But you've been a very open book, so I really do appreciate that, and I thank you for it. And I look forward to catching up with you again, maybe in another year from now, to follow up and find out how you're doing.
No, perfect, God. Thanks so much for having me. I really do appreciate it, and really honored to be on the show. Yeah,
super, James. And just one last thing. I mean, you're on Twitter. How can listeners follow you? Because you're quite active on Twitter, and it's quite interesting to watch your tweets sometimes. Where can they get hold of you?
Sure. So on Twitter, I'm James Bruce 131, and you can follow me there on Twitter. That's where I post most of my trading content. Yeah. Okay. Excellent. Fantastic. James, you take care. It's been good speaking to you, and we'll catch up again in a year or so. Thanks for having me, Garth. Cheers. Thanks for joining us for today's episode of Talking with Traders, brought to you by IG, a world-leading CFD provider. We really are privileged to have such a leader in the field of online trading involved in this series. Please follow us on Facebook and engage with us there. And a reminder to make sure you subscribe to this series by clicking on the subscribe button on your favorite podcast app. If you've enjoyed this podcast, we'd also appreciate if you'd leave a review on the app too. Till next time.